Welcome to the Facts versus Feelings podcast. I'm your host, Ryan Detrick, and I'm joined by my co-host, Sonu Varghese.
Cutting through the noise in 30 minutes each week with Ryan Detrick, Chief Market Strategist, and Sonu Varghese, VP Global Macro Strategist, taking out the boring and helping investors focus on what really matters. A quick note before we start the show. Investment advisory services offered through CWM LLC, an SEC-registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors.
Hey everybody, welcome to a very special episode of Carson's Facts versus Feelings. Ryan and Sonu here on location from Omaha at our Partner Summit. This is episode 87, and usually we come up with a title. We'll do it on the fly. How about talking about markets and life? How about that? Talking about markets and life with Jeremy Schwartz. Jeremy, welcome. Title and where you work. Compliance likes that. Then we'll get into it.
Global CIO at WisdomTree Investments.
Awesome.
Oh, welcome. So good to have you. I mean, I've followed your work for so long, and one of my favorite books is actually Stocks for the Long Run, written by Professor Jeremy Siegel. And you have a lot to do with it.
His name's on it. I mean, come on now.
Yeah. Your name's on it now.
I mean, we might be cutting this out, maybe not. We're going to do maybe the first ever dual release. You want to promote your podcast?
Right.
Assuming this makes it through compliance, we'll see. But we've never done this before. But dual release, go ahead.
Yeah, I host a weekly radio show on Sirius XM 132, but we also do a Behind the Markets podcast every week from that show. And
which I definitely recommend.
Yep. We've been Twitter friends for a long time. We do spaces with Ryan, and we do a lot of interaction with Sonu online, and it'd be great to do this as a joint release.
Yeah, so fingers crossed it will be a joint release. Where were we? I cut us in there.
Stocks for the long run.
Yeah,
talk about that.
Yeah, so I started working with Professor Siegel 23 years ago. It was my summer before my junior year. I was supposed to go to a semester abroad. I was trying to figure out something to do for a summer, and
this was at Wharton.
This was at my undergrad degree, and I was in his classes. He was sort of becoming famous for his op-ed just like 2 years before Big Cap Tech Stocks Are a Sucker's Bet, March of 2000. This was really just 15 months later when I'm in his class, and I needed something to do before the semester abroad. I said, I'll work for free, and he's like, I need some help. I'm doing the third edition of Stocks for the Long Run, and 2 months into it, he's like, I don't know what I'm going to do when you leave, and I never left. And
wow.
That's awesome.
Just imagine if he said right now, I need someone to help me for free. I mean, the line that would be unbelievable, but that's...
I volunteered, actually.
Yeah.
I was reaching out
that's
to him.
How you do it.
And
well, that's what they say, right? With your boss, the best thing you do is just, hey, what can I help you with? Take the stuff your boss doesn't want to do and make a happy boss. You go from there. So let's see here. So you flew in. Let's talk a little life. You flew in from Chicago today, right? Or where'd you fly in from?
Yeah, I was attending in D.C. There's a really interesting conference, SCSP, the Special Competitive Studies Project, is funded by Eric Schmidt, and he was doing this AI program and helped the government study the AI rules, but he really enjoyed the roadmap that they were doing, and then sort of funded this foundation called the Special Competitive Studies Project. They're trying to make sure in the great competition, a lot of China content there, and actually like half the day was something called the Ash Carter Exchange, which was a lot of very senior military type presentations of innovation combined with what's going on. It was fascinating. It's a really interesting group of what's going on. So coming in from DC and coming to here.
Well, neat. So again, we're coming to everyone, I'm going to say live. By the time you hear this, it'll be a couple weeks, but live from Omaha, our Partner Summit here at Carson Group.
And you can hear the buzz.
Yeah, you can hear the people, you hear the buzz. I mean, we saw on the screen today, so I guess it's the numbers of the numbers. We have more than 500 advisors around the country now, Sonu. What's been your favorite part so far about Partner Summit, Sonu? Besides this podcast, obviously, but your second favorite then?
No, look, I work from home. I work from Chicago, as you do too. You travel more than me. But it's great to meet everyone. Just meet our advisors, and the community here is, I think, what's special. And it's always nice. I mean, it sounds like a cliche to say, like, oh yeah, the community is great, but it really is. I mean, and just getting out and talking to advisors, and we are always talking about markets, but it's to a purpose, right? The purpose is to help our advisors, help their clients, help all of you, and this is where rubber hits the road when we talk to clients, like, and advisors. What are you doing? What cases do we have? Which clients are you talking to? How are we helping? It's great to hear all of that.
Well, absolutely. If you want to learn a little bit more, go listen back to episode 85 when Burt White, our new CEO, just joined us. We recorded that one also from Partner Summit, but that was a great discussion. So let's get into it. What's your average day look like? I mean, it sounds like, before we go there, hit rewind. You said you're like a global traveler. Just tell us, where in the world do you go in the next
global
month,
traveler,
Jeremy?
global CIO, what is it all?
Yes.
And you're hosting a podcast, which is great. I love listening to that.
This is a 2-week road trip. So I started off at a wedding in Miami. One of my good friends from college. We had a nice Indian wedding.
Nice.
Yeah.
A lot of dancing.
We had 3 days of partying, so that was a lot of fun. We got to go back to Florida from here. We got a bar mitzvah for the weekend, but then I go to Zurich and Milan. We've got a big European team, and as global CIO, I'm working with our European colleagues. They've launched some new products that sort of correspond with some of the stuff that we do in the U.S., and we're doing a cross Europe tour next week.
So for WisdomTree, how many people are on your team then?
On research, so I oversee the investment function that covers fixed income, equities, commodities in Europe, model portfolios. So it's about 30 people on research in a global basis. So it's a nice sized team.
Yeah.
So this is interesting since you brought up international, and let's talk about international investing. I think everyone we talk to, for the most part, maybe with good reason, is biased towards U.S. equities. And there's an argument for the fact that a lot of big U.S. multinationals are global companies, so they get profits from abroad too. So there is global exposure, even though you're investing mostly only in U.S. companies. But how do you view that, and what part of the international scene, markets, do you find attractive?
Yeah, it's quite interesting. The U.S. exceptionalism is something you hear a lot. It's
yes.
like, well, why am I going overseas? What's the point? We've got, even in a market cap MSCI All Country World Index, it's probably not quite two-thirds, but it's approaching two-thirds.
Yeah, right.
It used to be 50-50 not so long
now
ago.
Now it's at least 62, 63% or
yeah,
something.
the U.S. has been outperforming everything else, and partly last decade has been strong dollar also, so helping these other countries have been underperforming, and then their currencies are weakening. I think it's interesting. On a valuation perspective, the S&P's 20 times, a little bit more, 20 times forward earnings. You could get lots of Europe at 10 times. You go to Japan, the way we look at Japan, it's at 14 times earnings. The emerging markets are not so expensive. I'd say, I'm probably the most bullish. We're here in Omaha. Yes. Down the street, our good friend Warren is making the case for Japan. I love Warren's case in Japan.
Were you here, by the way, for their meeting?
I missed his meeting, but I was watching it on TV. So during the wedding weekend, I was watching
During the wedding,
live
you're watching Warren Buffett talk.
Live tweeting.
Oh, yeah, exactly. Yeah,
that's one of my favorite countries. We should talk more about that. But the multinational, yes, I think 40% of revenue from S&P 500 companies is from abroad. Now, I say more than half the profits, because the profit margins of their foreign revenue tends to be higher than the U.S. profit margin. It tends to be the tech companies, Apple, Microsoft,
Google, Meta, all of those companies are making, the profit margins really high outside.
Yes, and so, it's probably more than 50% profit. Now, interestingly, this is one of the things I talk probably the most out of people I follow about is the role of currency when you go overseas, which is, I think the S&P has a weak dollar bias because of all these profits. Right. So you have if you have a strong dollar, that's a headwind to some of your foreign earnings.
Because you're earning, say, revenue to India or China or Japan, and when you try to bring it back to the U.S. dollar is more expensive. So you're technically earning less, and that's
your euro's worth less. You have less revenue if you're earning revenues in euros. So, I do think people don't have enough strong dollar exposure in their portfolio. A lot of people think they need diversification. They go abroad to get foreign stocks. I don't think the currency offers value there. So that's one of my views. But
I want to jump in just for a second there. Sorry, one of the things that when I first heard WisdomTree, years ago. And I love the idea of being on the cutting edge, pushing the envelope, being the first to do something. Correct me if I'm wrong, but it felt like you guys were one of the very first to do these hedged, unhedged ETFs, Japan hedged, Japan unhedged. Again, kind of no recommendation on any ETFs, but let's talk a little bit about that. Were you guys one of the first to do that? Why did you do it? What did you think the opportunity was? It hasn't been successful.
So
A
great.
lot of questions there. My goodness.
Love it.
I've been talking for like 2 days straight. I don't know what's going on anymore.
And this is definitely one of my favorite topics, so you hit on a
you
good
go.
one. So we were the first ETF firm to
Awesome.
do it. So and the time, when WisdomTree launched, we launched our first 20 ETFs in June of 06.
Okay.
Okay.
Good timing. Yeah.
Back in 06, there was still a lot of first to market. So right out of the gate, international small caps were we were the first to do IFA small caps.
Okay.
And so right out of the
Interesting.
gates, we had a lot of international, and probably 2/3 of our assets were exposed to international. Now, if you go back to 2007, 2008, do you remember where the euro was and the pound was? The euro was approaching 150, 160.
Wow.
Wow.
By context, where's the euro now? 106, 107?
yeah.
Okay,
Okay.
so
It's a
I
good time
remember
to travel to Europe.
now it is. But I remember back then saying we have 2/3 of our assets exposed to a euro at 150.
Wow.
And I was
Okay.
saying, but if the euro goes down, that doesn't mean you don't want those stocks. Actually, those stocks become more competitive. Their earnings will go up if the euro goes down. So we started talking about in 08. It's sort of early days of WisdomTree, but we launched the first one at the end of 09. We launched our second one with the Japan. Japan was one of the first unhedged ETFs. We added the hedge in April of 2010, and it was complicated back then. People thought of the baskets; they didn't know how to trade it. I remember clients wanting to trade a basket. They couldn't. The market makers wouldn't make great markets, but Japan showed the way. Single currency. There was the earthquake in 2011, 2012. Abe comes in and says we have too strong of a currency. We need to weaken it.
Right.
That was the tsunami, I guess. This is a big
was
tsunami in Japan, you mean?
Yes.
Japan,
Yes.
yeah.
The tsunami.
And I'll never forget this. I lived in Cincinnati at the time. The day that happened, obviously it was just devastating. There was horrific, rain and floods in Cincinnati. And I said, is the world all connected? I remember one time it takes me 30 minutes to get to work. It took me 2 hours. The same day that happened. And believe me, this is maybe totally random. I'm hijacking this. But I was like, boy, the whole world is connected because that was a wild day, whatever that terrible, terrible tsunami was.
They say a butterfly flaps its wings. in
Yes.
one place
I'll
and
tell you,
causes
traffic
Yeah.
was terrible in
yeah.
Cincinnati that day. I'll tell you that. Yeah.
Speaking of and bringing Japan into it, and you mentioned Buffett. Buffett's invested in Japan. He obviously likes it. And I think they invested a little bit in China and the Chinese electric vehicle company too. But he's, interestingly, I mean, everyone credits Buffett for stock picking, and of course, which is not to deny that. But he's hedged his currency exposure with his Japanese picks too, right?
And I think it's
And levered it.
Did
as
he use
well.
WisdomTree for that?
what he did is very interesting. And in his latest annual letter, he talks about it. He's like, as much resources as he has, he doesn't think he knows the value of currencies. He says it's unpredictable, and he doesn't think he could hire anybody who knows the value, can predict the currency. So he says he's neutralizing his currency.
Okay.
Which is interesting because for all these currency traders out there, and you presumably Buffett has access to the best ones, and he still doesn't think anyone cuts it for him.
And a lot of people think the yen is cheap. So you could say, hey, now of any time, now you should be buying the yen. That's
Sure.
what I hear all the time.
Right.
But what he's doing is he's issuing bonds in yen.
So he's borrowing yen from Japanese people,
Investors who are giving him the money for 1% or below.
And it's Buffett, so you obviously give him the money.
He gives them
He's
very
good for
low
the
rates.
credit.
So he doesn't need the cash. He has 189
Yeah, of
billion
course.
on his
That's
balance
true.
sheet. He
As we've
doesn't
heard.
need
Yeah,
the
he's a
cash.
lot of money there.
It's doing that because of the yen, right? Because he's neutralizing the yen. But if he were to borrow in the U.S., he would cost him a lot more. So he's getting an effective carry trade. Doesn't have to put up the capital. So he got a great deal. But you can get 5%. Starting out, before the equities do anything, you get paid over 5% to hedge the currency, which is, if you think about where the S&P is at a 20 PE, it's a 5% earnings yield.
Right.
So you add 2 to 3% inflation, you're talking to 7-8% nominal on the S&P. In Japan, I'm starting with 5 today. 5
Wow.
carry, 3% dividends. It's 8. You're starting out with 8 before the stocks do anything.
That's amazing. Speaking of just sticking at East Asia, right? Japan or China right now? We're hearing a lot of talk about Chinese stocks coming back. Right? Ryan and I know several technical strategies.
Jeff DeGraff, Rinmag. I mean,
yeah.
there's some guys. Jeff's saying there could be a major change going on in China. And yeah, it's all about sentiment. Sentiment's about as negative as it can be. Well, where do you stand there?
So I mentioned this conference I just came back from, this SCSP group. A shout out to my podcast. We had a conversation with Liza Tobin a few times. She's a senior director for economy for SCSP. She has background in the White House, background in the CIA. There's interesting dynamics going on in China. And I think a lot of people say it's been a 3-year painful, brutal bear market. Is sentiment bottoming and coming back? A lot of short interest, and the technicals look a little bit better. Now, I've got an economist on my team who follows it closely. She doesn't think the government really has the stimulus capacity. They're trying to people are getting excited before this July meeting, so they think the politics are getting a little bit less bad.
Okay.
But if you were to say, give me a 3-5 year view, I would say Japan, India are your better plays. And now you can say a lot of people are moving away from China into Japan and India, and you say that's too consensus, but I think the strategic competition with China is not going away. It's a very rich in conflict issue.
And it feels like the U.S. is trying to, I don't know if kneecap is the right word for it, but with sanctions on their big companies, we're not letting I assume we're not going to be letting their EV cars come into the U.S. or put massive tariffs on them.
It's the only thing that unites Washington right now is who can be tougher on China.
That's right.
And so I don't think that no matter who's going to win the election, you're going to have
that's going to change
issues with China.
Not going to change. Yeah.
And so it's more of a tactical play. So like the Red Mag team is saying, if maybe there's this tactical bottom, but I would not be viewing this as a strategic holding. You got to have an itchy trigger finger on when you would get out of that trade.
Well, that makes sense there. I want to talk a little bit more about WisdomTree. So you've been there the whole time, like literally when they started. And how is Professor Siegel connected with WisdomTree? I understand does he work there or he just does stuff for WisdomTree? What's the connection?
So he's got a title of senior economist for us. So he's a strategy advisor, never a full-time employee.
Okay.
Sort of always but we do model portfolios with him. We do. We just launched this app called WisdomTree Prime, and we actually have some funds with his name on there in WisdomTree Prime. So he does work very closely with us. But he came on. What the background was, I mentioned his op-ed, Big Cap Tech Stock Suckers Bet in March of 2000. He was going through
March of 2000.
March 14th. It was the day
14th.
Of the peak, basically.
Okay, so for the younger people out there don't remember, that was the peak for tech. I know the S&P peaked in August, but for tech, it was
the NASDAQ.
Big Cap
NASDAQ was second week of March 2000. Wow.
So that's why I volunteered to work for free. But he was going toward his own portfolio had been in the Vanguard S&P 500 since the 1970s. So he was like one of Vanguard's first investors. So he was selling the S&P and buying value because he believed in stocks for the long run, but he was selling the growth because he was telling people suckers bet. So his own journey started going towards researching. He believed in the internet, sort of like the AI today. There's a lot of narrative about AI is going to be bigger than the internet. And he believed in the internet changing growth profiles, the economic growth, productivity.
Sure.
He believed in the tech, but he was trying to say, well, how do I protect from bubbles and valuation? So I helped him do a second book. It was called The Future for Investors. That was all about that. Look back last 50 years, look forward the next 50 years on the economy and stocks. And that Future for Investors had 3 recommendations. It talked about high dividends, international, and value, sort of the DIV directives. And that came out in 2005. WisdomTree was getting funded in 2004. We launched our first ETFs in 2006. And Siegel said this research is right in line with my book and what his beliefs were. So he joined as an advisor when they were getting funding, and they brought me on to help with the research, and I'm now the second longest employee after our CEO.
Well, congratulations, and thank you to WisdomTree for being such great partners. There's a rumor going around. We're wearing the YouTube channel, you can see these. Facts versus Feelings. Carson. On the back, it says Dan Davis. We're fans of Dan Davis. But the shirts that we're going to have at Excel, I believe we're going to have WisdomTree
on the back. Back or front or side or somewhere, but it'll be there.
Maybe throwing in the front. But no,
so thank you for that.
Thank you for sponsoring, helping us, and maybe potentially sponsoring some T-shirts, which is always very, very cool.
Yeah.
I'll have to
we talked internationally.
That's a good. You know what?
Let's do that.
We're probably about the midway point anyway. So let me jump in just for a second here. We know you have a lot of options. when it comes to fall conferences, but you won't want to miss Excel. We're in Orlando, September 9th through 11th. We're bringing some of the biggest and brightest Carson stars to the stage, and maybe some Facts versus Feelings T-shirts also added that.
Sponsored by WisdomTree.
Sponsored by WisdomTree.
Here we go.
We're going to even record a live episode or two from the main stage. Sonu and I will for the Facts versus Feelings podcast live. Go to excelconference.com. That's EXCELL conference, all one word, .com. It's a lot of fun. We've done them a couple different times now since I've been here, and they're always a great time. They are open to anyone. You don't not have to be a Carson partner. You don't have to be with Carson Coaching. If you're someone in the industry looking to learn a little more about Carson, but also have a lot of fun, please consider going at checking it out, excelconference.com. Where were we? I butted in. I forget.
Let's talk valuations. I want to come back to that. Let's come back to the U.S., right? U.S. And it seems like one big thing I hear from a lot of advisors, I don't know if I'm sure you do too, like we're concerned about valuations.
Yeah.
Technology stocks. Yes, the AI story is there, but valuations. I want to talk about that. But one thing you did mention, like, say the S&P 500's PE ratio, price earnings ratio is 20. You invert that, you get earnings yield, which is 5%. Right? In Japan, it's, you said about 10 or 5.
The earnings yield on our strategy is around 4. The P is 14, so you get a 7% earnings yield.
7% earnings yield. Now, if I think about the S&P 500, 5% earnings yield, then I look at a cash rate. I'm getting 5%.
Over 5.
Over 5%. I'm like, wait a minute, 5% earnings yield on stocks, the S&P 500, 5% on cash. First of all, well, two questions. Am I looking at it the right way? I know you and I see eye to eye on this, so I'm just teeing you up there. But what's the case for stocks over here?
Well, yeah, and people are saying, our friend down the street, Mr. Buffett, saying, hey, and he's made an allusion to the Fed giving him 5.4%. You know, he's earning more and more off his cash. Now, the question is that a hurdle rate that becomes so hard to overcome? And you understand 5.4 is, you got to think you're going to get a higher expected return. Now, the Fed's not going to keep rates at 5 forever. Now, they're not. Now, people thought they were going to be cutting sooner. They pushed back how quickly they're going to be cutting. We think the terminal rate is probably higher than the Fed says, but so they're not going to be at 5% forever. You have to really, the key thing, a lot of people show that 5% versus 5.4 and say, hey, we've got a negative equity premium. That's what
let's not invest in stocks then.
And stocks are what we call real assets. That when you look at the long-term earnings and dividend growth, you're buying intellectual capital. You're buying the plant, property, and equipment, all the assets that are real assets. The earnings power of firms grow with inflation over time. That's one of the Siegel central findings in Stocks for Long Run, that stocks delivered 6.5% over long periods of time above inflation. Stocks were the best.
Because usually when people think real assets, they're thinking real estate, gold,
stocks.
But stocks.
Stocks were the best asset to hedge inflation. You get the cash flows of the firms go up with inflation over time. When you see companies talk about pricing power, they talk about their input costs go up, but they raise their prices, and generally stocks have that pricing power to do that. And so you look at the dividend growth of the S&P, it's been about 2% above inflation for 70 years.
2% above inflation. So it's inflation adjusted, basically.
5.7 versus 3.7. And for dividend growth, off of the cash flows off of owning the market versus inflation. So that's where you compare it versus TIPS bonds. So the TIPS bond is an inflation-protected security. You get coupons; they get adjusted with inflation. Those yields are only 2.25%, 2% today. So it's 5 versus 2.25, 2.5. You're still getting 2.5 versus that. Now, if you look back the last. We were spoiled.
Yes.
You go back 10 years ago, you had an 8% equity premium. You had, 12 PEs and 0 bond yields.
0 yield.
So we were spoiled. But today at 2.5%, it's not that different than Siegel's 200-year average. Siegel's data showed 3%, 3.5% over very longs, but bonds are lower. Bonds did 3.5 over his long data. Now you're going to do 2. And stocks are not going to do 6, 7, 6, 8. They're going to do 5.
Sure. Right, but that's still a premium over bonds.
Still a good premium, and again, 2% TIPS takes 36 years to double your money, versus 5 takes 14 years.
That's good perspective. That's the case for stocks.
That's the case for stocks right there.
So again, this is episode 87, Carson's Facts versus Feelings, talking about markets and life with Jeremy Schwartz. Also, potentially a combo of the Behind the Markets podcast. We'll see.
Maybe we'll talk about the life aspect of it. You cook. You're a good pitmaster, barbecue.
Yes,
right?
that's one of my favorite. That was a COVID pastime. Our block.
Ryan's
We do block parties.
We like that stuff too.
We got a Traeger grill. I bring in some nice beef. But it was something just to do during COVID. And
what's your favorite thing to smoke?
I do a bunch of beef ribs is my favorite. So we're ribs. We're a ribs family, but beef ribs in particular.
Well, that sounds.
Do you make the sauce and stuff yourself too?
I do a lot of. I think I picked it up from Twitter from Brent Beshore was talking about carnivore black seasoning is the seasoning for the beef ribs, and then I do sometimes do some barbecue sauces, but I don't really make my own.
So it's been a really busy day here at Partner Summit. Like literally, I didn't eat much lunch. So like talking
now
about
I
haven't. I
haven't had breakfast or lunch.
This is not going to be good. This is not going to be good. We've got about 10 minutes or so.
We need to go to Philly now.
Well,
any time is a good excuse.
Yeah, hey,
yes.
There's good food. You better believe it. We got about 10 minutes or so, Jeremy. It's amazing how fast this goes. Let's talk a little macro. But again, by the time people listen to this recording will be maybe a couple weeks early. But let's talk big picture. Inflation, right? We had 9% inflation. We know CPI came back to 3%. It's been a little stubborn. Where's WisdomTree? What are WisdomTree's thoughts on inflation here?
Well, Siegel and I have been talking a lot about our own measure of inflation, where Siegel was hammering the Fed. He was saying...
Yes, he was. He was a CNBC
Is
star.
he still hammering the Fed, but from the other direction, though?
Well, he sort of said, people are trying to give Powell credit for landing the plane.
Yeah.
And he hammers them there too, saying, well, it's like you're a drunk driver, you hit somebody, crash them, and then you save their life and take them to the hospital. We didn't have to be at the hospital. So
interesting way to describe it, but
you didn't have to do that. So now he does think that part of where they were looking at bad data was in housing and real estate and shelter. The BLS numbers very lagged.
We've talked a lot on this podcast about that.
You guys have your own measure, like where you substitute some of the official housing inflation numbers with what's real. What's real? Yeah, thank you. Yes.
And listen, there's no perfect way to get these numbers. There's all sorts of different ways. We've updated how we've thought about it from when we first started looking at it, but apartment list looks negative when the BLS looks almost 6%. So you don't do a super core where you're just looking at things X shelter. You plug in a more real-time shelter and you have core inflation below 2 and maybe even below 1 if you use apartment list. So it's a...
Wait, say that again. If you substitute actual real-time market data instead of the official government data for housing, we are at 2% inflation, if not less.
Like
Below.
if you're
Is
using
that core or headline? Or
both.
Okay,
if you use apartment list, which has a negative number for the last 12 months,
many months in a row,
and for the 12-month number, it's negative. And so if you plug in that, you're below 1% on both of those numbers. If you use some average of Zillow, which is a little bit higher, Zillow is more like 3%.
And how can someone find that? Where do you go on your website to get that? Is that free data, or how's that work exactly?
It's on my Twitter feed. So, we usually, on the inflation days, we'll put up some outdated charts, and we sort of put our own calculation out there.
Talk about the earnings. You always talk about the earnings that they do. The
WisdomTree has this dashboard, which I love. And they've got a daily dashboard, and they've got an earnings dashboard. They have more than that.
Yes.
These are the ones I look at all the time. During earnings season, it's literally always. I have 30 to 50 tabs on my thing.
It's amazing his computer works. I mean, the guy's got 19,000 things open.
And then there's Bloomberg and the FactSet and all of that.
But that makes me happy.
He's like, I don't know why he's like, why is my computer running slow? It's like, it's got NASA on there, I mean.
So one of the tabs I always have open during earnings season is your earnings path, is it?
It's called the path tool.
The path tool. It's so great because it's not just the S&P 500. You can look at, the Russell 1000, small cap stocks, mid cap stocks, the S&P 600, the S&P 400. See, okay, how many companies have reported? How many are reporting a surprise? What's the average surprise for earnings and revenues?
You update that daily or hourly, or how's that work?
We are updating that every morning during earnings season. The path tool. It was modeled after some functionality we saw from a bunch of different providers, but the idea was as we're going through earnings seasons, how do you track how our indexes are doing versus the broad benchmarks? And we have S&P, MSCI, Russell indexes. Then we try to summarize it into like a style box so you can put a grid like you think about the traditional 9-box grid of large to value. And because I mean, you can look at it on a per sector basis if you want to drill into each specific index.
So you can go to energy, financials, healthcare.
We do some
all of
S&P X Energy or S&P X Tech. We do some combinations on all that.
We've talked about the X Tech before and different ways to slice and dice it, but okay.
That's great. And then there's a daily dashboard where you show, which I know some of our own advisors use in their own modeling work, portfolio construction work for valuations. That's really handy.
There's about 30 pages in this daily dashboard. We keep adding new functions. It's like, hey, what's on Jeremy's mind that day that we keep adding new things? But one of the things, if you're looking at the tech sector versus the non-tech sector, we put a custom grouping of S&P Tech. That's now 40% of the S&P 500.
And it's not just the official tech sector. You've included
like Amazon and Meta.
Google's communications.
Right. But they're all tech.
Right.
But that's now 40%, and that's at a 30 PE versus a 20 PE. So there's a big difference if you look at that grouping.
That's interesting. What's We've got a few more minutes here. There's a couple more questions. This has been a great discussion here with Jeremy Schwartz over at WisdomTree. What's something about Professor Siegel that maybe most people don't know? And I'm not saying what color underwear the guy wears, but I mean, what's something most people don't know about him? Because he's such an icon in the industry, and we get to speak with him tomorrow. It's an honor to speak with both Jeremys here back to back. But what's something people don't know about him?
He's become famous for finance and the classic stocks for long run. He's never taken a single finance class.
Wow.
So he's sort of
like Dr. Phil not being a doctor,
It's like self-taught in finance. So he was actually when we talk about him bashing the Fed, what was his PhD in at MIT? It was in monetary economics. So he was trained. He's like, if there was one job he would aspire to be, it's probably to
chairman
be Jerome.
Of the Fed?
Yes, chairman of the Fed. I think that's the only job he would take.
Well,
but
we've got a podcast, so we don't know how to communicate. So anything can happen. Anything can happen. Yeah.
That is what he was trained for, and so he does come when he does give the harsh critics of the Fed. That is what he was trained to do.
I haven't done a course in finance either, by the way. So I've never done it. Maybe I shouldn't say that. I've never done a course in finance.
You learn on the job is what happens. I mean,
it's true. I learn from this guy every day.
I studied finance at Wharton, but it was really on the job working for Siegel that I learned.
That is the truth. Yeah. So you can have all the discounted cash flows and blah, blah, blahs. Well, it's supposed to happen this way. How many economists the last 2 years, as we've talked about on this podcast nonstop, well, look, LEI is this, and
yield curve
ISMs are this, and M2
the yield curve
is
inverted.
Oh, the yield curve is inverted. The end of the world is near, and it's like, look at the real world. The consumer is still spending. Until initial claims spike, until credit spreads start to blow out a little bit, or at least stress, there's no recession coming. A couple more questions. Go ahead, Sonu.
Well, let's talk. Yeah, you spoke about the Fed and Professor Siegel wanted I guess his dream
barbecue.
job.
Talk about barbecue
And Fed chair. What do you think the Fed will do? What do you think they should do?
Yeah.
Well, people have written off the cuts now.
Now it's like they're predicting one cut,
one or two cuts,
2024.
I think we've been saying recently on our show, perhaps at the June meeting they potentially can tee up a July. Actually, I think that's much sooner than most people are thinking now.
Yeah, but it's only 3 months left.
Right.
But it's let's see. I mean, we got 2 more inflation reports before that meeting, so let's see if it does come down our way. I mean, we do think it will come that way, but we've got 2 more inflation prints to see it.
Yeah, I'm not too far off. I know Barry Ritholtz wrote something that Fed should cut right now, and he talked about
we
about
agree.
probably similar, using your guys' data, honestly. Where if you look at the real-time rents data and real-time housing data, shelter data, oh wow, CPI is actually
inflation's below 2%, and
So without answering Professor Siegel, because that's an easy answer, who's someone you learned from, a mentor in this industry that you learned from?
Well, I've been at one firm for 23 years, so it would have to be our CEO, Jonathan Steinberg, who's really taught me about being an entrepreneur, about innovation, about how to really push forward new ideas. And he gave me a lot of, when I took over as head of research at WisdomTree, I was 2008.
And when was that? When did you do that again?
2008. I was 27 years old, and he
early 2008, or when what was hitting the fan, or when did it happen?
When it was hitting the fan.
Okay, so here, young kid, they did that on purpose. So throw him in,
he doesn't know any better.
Just fire him. Well, they can just fire you then. That's a young kid didn't know what he's doing. Then go hire somebody big. I guess you made it work though.
But
there you go, man.
He gave me a lot of responsibility at a young age, and
trial by fire,
and we've thrived with that.
No, you guys have done fantastic. I mean, we like everything you do. I mean, including the research. It's not just, you usually think products and things like that, but you do, obviously, as we just talked about, you provide a lot of research, which is fantastic. So thank you.
And
for
a lot
that.
of it's just free, right?
Yeah.
It's on
It's all
Twitter,
free.
it's on your website, it's on a
Yeah.
podcast. I mean, I think that's awesome to give it away like that.
Right.
How
And-
about one more from you, one more from me? We're probably going to wrap it up, Sonu.
Let's go actually thinking long-term interest rates. Right. One thing is the Fed expects long-term, and let's not define exactly what that is. Maybe 4 or 5 years. They expect to take interest rates back down to 2.5%, thereabouts. But the market's expecting them to keep rates around 3.5%, 4%. Like, something's got to give, right? Either the Fed moves their expectation higher, or the market's just completely reading it wrong. What do you think? Where are you guys?
Well, we pushed them early on to say you need to bring your rate down to that 2.5, and 2.5 represents like what's called the R star, the neutral long-term equilibrium
trying
rate.
not to use the word.
No, so they talk. What it is inflation
yes.
plus some real growth.
Right.
So that 2.5 is like 2% inflation plus 50 basis points real. Is what is that neutral rate where they're not too accommodative, not too sort of like the Goldilocks
Not too hot,
position.
not too cold.
And we think it's probably more like the 3.5. Now, part of that is a belief in productivity coming back. You had a disastrous decade for productivity.
Right.
The 2010s. The long term is like 2%. It averaged 1%. You had no short term. It's been swinging around. You had a disastrous 2022. You had some big negatives. You come back in 2023, but we're believers in the AI story. So I talked about how now can the AI be bigger than the internet? And maybe there's hype in the short term. One of the big stories of this AI conference I was just at in DC was AI gets overhyped in the short term, but underestimated in the long run. And
I like that.
And I think
It feels like a very market thing to do, and momentum's behind that.
And you can see that. You can see there's frothy in some areas, some frothiness, but it is hard to grasp what is the real impact of this stuff. And we do think it will be meaningful for productivity. So that gets you to that 3.5%.
Maybe kind of a lightning round. Eagles fan?
I grew up in Florida, but we have adopted all the Philly teams.
So how far are Eagles going to go? Get lightning round. What do you think? How far are they going to go?
I mean, they keep disappointing right at the end. We should have won it. Oh, what happened?
Boy, sorry, here we go.
What happened?
Yeah.
And then
Ouch.
Sixers.
Yeah.
But
now there's two places that have the what's Philly known for? The two places that go out.
Pats and Geno's.
That's it. Which one are you? Who are you? Which one?
I'm more of a Geno's guy.
Why? What's the difference? I have no idea.
It's sort of one is more finer tuned chopped and some of these bigger slices. But actually, it's Mama's Pizza by us has some of the best cheesesteaks if you come through Philly. You can do Jeremy's Barbecue Pit for the beef ribs, and then we'll go to Mama's Pizza for the cheesesteak.
And the cheesesteak they come with two different options for
sauces,
is it?
You could get provolone or with whiz,
Is
whiz
there
or
a
without.
thing to do, like the secret Philly thing?
Yeah. I think it's like, the cheese whiz is everybody's preference, but it's like, I'm kind of a provolone guy, but.
Okay.
Right.
Next time in Philly.
We'll give you a heart attack for sure.
Yeah, that's all right. Final question. Let you go out on this here. A lot of places you can ETF from. Why WisdomTree?
Well, we try to be thoughtful. I think we definitely do things differently. We're trying to push the envelope on innovation. For sure, we were the first to do a lot of very interesting international stuff. But now we're even going away from single ETFs to model portfolios. The way we work with Carson is not through just trying to get single ETFs. It's trying to help you with models. And so I think that's a big new growth engine for us is servicing people through model portfolios. And we don't charge for the asset allocation. It's trying to give and it's not just WisdomTree. It's open architecture, taking the best ideas from around the industry and providing thoughtful advice around that.
Including income portfolios, which is, like a lot of retirees who need income, and that's very useful in that regard.
It's been great to work with the Carson team on that.
Well, no, we love it. Thank you for the partnership. Thank you for flying in. When I heard when you were landing, I was like, ooh, we each came a day late because of storms. I was like, well, we might just do this without you, but I'm glad you made no bumps and bruises. I mean, it's been wild weather.
3:45 wake up for a 6 a.m. flight.
Well, thank you.
Thank you for coming.
Thank you for doing that. Again, episode 87, Carson's Facts versus Feelings, and potentially a dual release with Behind the Markets. We'll see.
It's fun, guys.
If that's happening or not.
Thank you.
But everybody, thank you. Chelsea, let's see here. Is the next one going to be Professor Siegel? No, just be a regular one. All right, so next week's podcast just be a regular one with Sonu and myself, and then 2 weeks later, we'll have Professor Siegel on. So take care, everybody. See you next week. Goodbye.
Information provided on Facts versus Feelings with Sonu Varghese and Ryan Detrick are for general information only and are not intended to provide specific advice or recommendations for any individual. The statements and opinions of show guests may not be reflective of CWM LLC or its affiliates. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Guests on Facts versus Feelings are not affiliated with CWM LLC.